Welcome to Simple Accounting channel. This is Uttam Sir. Today I have to discuss the marginal costing. Marginal costing approach normally solve the two problems. If you have the excess capacity and you have the limited capacity. Excess capacity sometimes said accept or reject criteria. In my last video, the part 1, I have already discussed that. This is the concluding part. In this concluding parts, I have to discuss how to determine the optimal production. Sometimes when the company is growing, different time the limiting factors can acting over there. Limiting factors means some of the factors which limits the total production. Maybe sometimes you have to curtail the production because you don't have the sufficient resources. So in respect of growing stage, maybe the PLC means product life cycle. When the company is running the growing stage, product life cycle, there are the 4 stages: the introduction stage, growing stage, saturation stage, and the declining stage. If the company is in the growing stage, different time this type of problem is to be faced by the company. So limiting factors which actually curtail the production, which limit the production, this is called the limiting factors. Limiting factors, whenever the company is facing the limiting factors, different time the company is normally face the crucial time. As a professional accountant, I know this is the very crucial time. If the wrong decision is to be taken by the company is to pay the consequence. If it is the correct decision, the company could have the benefit of it. Maybe the failure and the success is normally depends on this stage. If the management making the wrong decision, the company is to be suffer for the longer time. So in this stage, I think the management must have to show the visionary, far-sighted, then the company's success must be in the future. But if wrong decision is to be taken in this stage, then total failure is to be done. This is quite sure. Right now, what information you have to be given to find the optimal production? What is called the optimal production? Optimal production is the amount of production or quantity of production. If you can produce that, then the company total profit is to be increased. The total profit will be maximized. So any organization must try to do it to reach that level so that the whole profit or the total profit of the business is to increase or maximize. What information you have to be provided? You have to provide the several informations in your practical question. Maybe what type of products you are going to produce, that is to be given, that information is to be given. Maybe you are going to produce A, B, C, D, 4 types of products you have. Maybe the A is going to be produced is 3000 units, B is to be produced 5000 units, C is to be produced 2000 units, and D is to be produced 2000 units as well. So this is the production target. Sometimes it is called the budget. So you have to produce the A is the 3000 units, B is the 5000 units, C is 3000 units, and D, that is all 2000 units. 2000 units. So maybe some of the budget you have to be given, some of the standard cost is to be given. Whenever you are going to produce this product A, B, C, D, then you have to get the cost price of the raw materials per unit, cost price of the raw material per unit, cost price of the labor per unit, cost price of the variable overhead per unit. You have to be given. In the same times, you have to be given how much time or how much quantity is to be required to produce 1 unit of production. What quantity you have to be required, that also be given. Then you have to be given some of the another data, the market demand. Maybe the company is operated by the budget. Budget is the financial statement which is to be implemented in next course of time. See the budget. So budgeted figure is like that. A, B, C, D. A is 3000 units, B is 5000 units, C is 3000 units, and D is 2000 units, like that. This is the hypothetical question. I am just going to say you, but maybe the question you have to be scrutinized, you have to be examined the question you are given, what quantity they are going to produce. So information is given: cost per unit, material cost per unit, labor cost per unit, variable cost per unit. Again, the what amount of resources is to be required to produce 1 unit, that is the material, how much material is to be required, it is 1 kg or 2 kg, like that. So how much quantity of materials is to be required, that also be given. How much labor hours is to be required, or machine hour is to be required, and what is the in respect of variable overhead, how much labor hours or machine hour is to be required, that information is to be given. You have to be very closely watch that in the question paper. Now you have to locate what is the limiting factor is normally lying or it is occupied. What is the limiting factors? Limiting factors may be in materials perspective, maybe labor perspective or machinery perspective, and the other factor is that the other factory overhead perspective. Most of the cases, limiting factors is normally located the labor hours. Labor hours is the limiting factor. Sometimes it is to be given by the sum, but sometimes it is not given. Then you have to determine what is the limiting factors actually lying. So if the question is the difficult one, then what is the limiting factors is working for this organization, that is to be determined. This is the difficult one. So if you are going to calculate the optimal production, then optimal production, so some of the steps you have to be followed. Maybe the first step, you have to calculate the contribution margin per unit. First of all, first step. Second step, you have to locate where the limiting factors is working. Second one. Third one, what is the contribution margin of limiting factors? Third one. And fourth one, you have to make the rank. Ranking means which product is most profitable. So you have to make rank 1, rank 2, rank 3, rank 4, rank 5, like this. So this is the ranking, is to be the 4 stages. Once you are just completed the 4 stages, that is the ranking, then you can do the optimal production. Optimal production may be you are going to produce A is the 3000 units, B 5000 units, C 2000 units, and D it is supposed to be 2000 units as well. So you are going to produce that is the market demand. Maybe whatever your production capacity, but market demand high than your production capacity. So if the market capacity, market production is more than your expected capacity, then this type of problem is to be dealt by the optimal production. So how the optimal production is to be calculated? So I am just going to display it. Just watch it in the board. Here the contribution margin calculation. First of all, as I said, you have to calculate the contribution margin per unit. So you see whatever you have to be required. You have to be required the selling price per unit and variable cost per unit. So selling price per unit minus variable cost per unit, you got the contribution margin per unit. So that is to be calculated first. Here some of the display. If the visual problem is over there, you are not seeing properly, then you have to zoom it. So selling price is hypothetical information is given over here. Selling price is given for A is 50 units, $50, B is $40, C is $60, and D is $30. This is the hypothetical. I just gauge it. Selling price for this, and variable cost. Variable cost, the material cost is over here. That is $15. Labor cost is $20, and variable overhead is $5. So this is the variable cost. So sales minus variable cost, then you got the contribution margin per unit. So here you see 15 plus 20, 35 plus 5, that is 50, 40. 50 minus 40, then $10 is the contribution margin per unit. $10 contribution margin per unit per unit for A. Similarly, B, that the $40 and it is to be subtracted by $26. That is the variable cost, and got the 14 contribution margin for B. See the similarly contribution margin is 15 per unit, and D contribution margin is 5 per unit. So according to this data, the 15, that is the product C, is the maximum contribution is provided. So you have to produce first of all this. Second one, that is the 14 contribution per unit. So you have to produce B, second one. And third, that is 10A. So you have to produce 10A. If the optimal production is not going to be calculated, so sum is to be concluded over here. But since your business is growing, your business is getting popularity day by day, your product demand is to be increased day by day. So this time, obviously, since you have the limiting factors or limiting resources, so limiting resources normally available to the labor hours, maybe the machine raw materials, maybe the machine hours, that can be managed, but labor hours sometimes it is difficult to manage. So now you have already calculated the contribution margin per unit. Now you have to calculate the contribution margin of limiting factors. Here I consider myself the limiting factors is the labor hours. Labor hours is the limiting factor over here. You have 25,000 labor hours altogether. So whatever the market demand, you need to be produced, but that to be produced by these 25,000 hours. You have altogether 25,000 hours available. By that hours, you have to produce the products. Maybe some products cannot be produced. That is why it is limiting factors. Limiting factors limit or restrict the production. That is why the limiting factors. But what will be the quantity? Maybe we have already calculated the contribution margin per unit. That is A 10, B 14, C 15, and D 5. Apparently, this product, C product, is more profitable for the business. Right now, we have to calculate contribution margin per labor hours because there is the limiting factors. That's why you have to calculate contribution margin per labor hour. The contribution margin per labor hour which is giving more, that is the most profitable product that is to be produced fast. Here you see, this is hypothetical writing, that is the labor hours. Labor hour requires to produce 1 unit of A is 2.5 hours. This is hypothetical, 2.5 hours. Product B, it is to be required 2 hours. Product C, it is to be required 3 hours, and product D, it is to be required 2.5 hours per unit whenever you are going to produce the product. So first of all, this is the 10 contribution margin per unit. Right now we are converting contribution margin per labor hour. So this contribution margin is to be divided by labor hour. Labor hour is needed 2.5 hours to produce 1 unit. That's why 10 divided by 2.5, the figure you got, that is 4. 4 is the contribution margin per labor hour. Contribution margin per labor hour. Contribution margin per unit divided by labor hours to produce 1 unit. So this is the terms of calculating the contribution margin per labor hour. So 10 divided by 2.5, that is the 4 is the contribution margin. CM for contribution margin per labor hour. So this is the 4. Similarly, here the contribution margin for B is 14, but hours is required per unit is 2. This hypothetical, and the question you have to be given. In that question you have to be given that labor hours over there. So this is the 2 labor hours. 2 hours is to be required to produce 1 unit of B. So 14 contribution margin divided by 2. The figure you got, that is the 7. This is the contribution margin per labor hour. Again, whenever you just calculate the product C, here the contribution margin is 15. per unit, that is to be divided by 3. 3 means 3 hours is to be required to produce 1 unit of C. That's why 3, that is to be divided by 3. So 15 divided by 3, that is 5. This is the contribution margin per labor hour. Again, whenever it is D, contribution margin is 5. That is to be divided by divided by labor hours, which to be required to produce that product. That is 2.5. So 5 divided by 2.5, then the contribution margin per labor hour is 2. Now you have to make the rank. Rank means which is the more profitable by the limiting factors. You see here the 7 is rank number 1. Here you have the 5, rank number 2, and it is 4, rank number 3, and finally it is only 2, rank number 4. This is the ranking. Once you have done, then you can do the optimal production. Once again, here the display, here the optimal production. Optimal production, first of all, you have to write here product, then labors hour used, then labor hours available, then the output. As we have already said, limiting factors means some of the factors which limit the production. So all production which is demanded by the market cannot be produced. That's why limiting factors, this is the only the formula to calculate the optimal production. Optimal production, the production if the company can produce, the company total profits is to be maximized. So first of all, you see product, which product is making the greater contribution margin per labor hour, which product is contributing highest contribution margin per labor hour. You see highest contribution margin is product B, here the 7, the rank number 1. Second, we have to produce the product C. So we just write it, product B is the highest production contribution margin per labor hour. So that is written first. Second, ranking, according to the ranking, C, then A, and finally D. This is the product. Now you have to calculate how much labor hour is already used to produce that particular product. As I have already said, the product B is to be produced 5,000 units. So all 5,000 units can be produced. How much labor hour is to be used to produce the 5,000 units? Here the 5,000 into 2, because 2 is to be required to produce B. Here the produce B, the labor hour is to be required per unit is 2. That's why total production multiplied by labor hours. So that is why it is 5,000 units going to be produced, the market demand, and it is to be multiplied by 2. That is 5 to the 10. 10,000 hours is to be required to produce 5,000 units of product. So you have right now hours used for production of B 5,000 unit. 5,000 units is to be required 10,000 hours. So here the total labor hour is 25,000. From 25,000 you have to subtract the 10,000. The hours remaining, this is called available hours. That is hours available 15,000. How this is to be calculated? This is to be calculated 25,000 minus these labor hours. That is 10,000. 25,000 minus 10,000, then it is the 15,000. This labor hours is available to produce the rest of the production. So that is the figure. And output, obviously this is the 5,000 units. It full can be produced. Second one, you have to get the ranking number 2. Here it is. Ranking number 2 is this product. This is the product C. That is written product C. B after it is C. So this figure is to be 2,000. As it market demand is 2,000. So how much labor hour is to be used to produce 2,000? It is multiplied by 3, because 1 unit of production of C is to be required 3 hours. That's why 2 into 3, that is 6,000. Your hours available, it is the 15,000. From that 15,000 you have to subtract the 6,000. So hours available is 9,000. This is to be used for the rest of the production. So 9,000 hours is available. So production is 2,000 units. So it is the output is 2,000. Again, now you have to find the third largest contribution margin per labor hour. You see here the ranking number 3, that is the product A. So that is to be written over here. Product A, that was the figure 3000 units to be produced. So here the 3000 multiplied by 2.5. 2.5 means 2.5 hours is to be required to produce 1 unit of C. That's why it is to be multiplied by 2.5. The total production you have to be required the 7500 hours. So you have already available 9000 hours. 9000 hours minus 7500 hours. The hours is to be available for the rest production. So here the 1500. So 9000 minus 7500. That is the figure. It is the 1500 hours is available right now. So that is to be used for production of D. This hour is to be required to production of D, and this output is to be the 3000. This 3000 coming from this 3000, this 2000 was 2000 and 5000 over 5000. So this production A, B, C, all production can be done by the available labor hours, and the labor hours available by production of all 3 units A, B, C. The available hours, that available hours only be used to produce the D. So what is the amount of production of D? The production D is to be required 2000 units. The market demand is 2000 units, but total hours is not available to produce the 2000 units. So you have to curtail the production. This is the application of limiting factors. You have to curtail what amount or what quantity you are going to produce. How that is to be determined. So in this situation, then you have to find what amount of hour is to be required to produce D. So according to the previous information, that is this D is to be required 2.5 hours. 2.5 hours is to be required to produce 1 unit of D. So this to be applied to find the what amount, what quantity the D can be produced by the available labor hours. Available labor hours is 1500. So this 1500 divided by 2.5, the figure you got, that amount can be produced for D. So here you see, here the 1500 divided by 2.5, 1500 divided by 2.5, the figure, this is the 600 units. But market demand is 2000 units, but you cannot produce by the existing resources, that is the labor hours. That's why you are curtailing the production. You have to produce right now only 600 instead of 2000 units. So here the 600 multiplied by 2.5. So the available hours is going 0. So the production is the 600 units. This is the optimal production. This optimal production must be implemented by the organization. Optimal, once you got the optimal production, what is to happen? The company's profit is to be maximum. I have already said you in respect of growing stage, this is the platform, this is the turning point for any organization, because if the management, the top management can take the right decision, the company must be success in future. You never to run after for the short term profit, but you have to think about the long term profit. Customer satisfaction is very important. So you have the opportunity to satisfy your customer, and continuously you need to market research about the customer satisfaction. You never tricks with the customers. You never play with the customers. Customer is the biggest asset for the business. So among you, those who are the owner or the managing directors or the directors of the organization, you cannot participate the business activities as because the business unit concept, since the company is the incorporated body, that's why those are the owner, they cannot directly participate to the decision making process, but those who are the senior management, they are only responsible for taking the decision. Maybe the managers, they are appointed by the board of directors or the chairman, but chairman may not come frequently to the organization due to the business utility concept, business entity concept. Due to the business entity concept, those are the owner, real owner of the business. They cannot participate in decision making. But what they are doing, you must have the close observation. If the manager is sometimes operated by their own interest, maybe the manager's salary depends on the performance or the profit. Sometimes they are run for the short-term profit, which the more profit is to be generated at any cost. So if you are going to do this, the growing stage, maybe it is the wrong decision. As a professional accountant, I myself can suggest you not to run after the short-term profit. You have to consider the long-term profit. Long-term profit, maybe if the company can satisfy the customer, if the satisfied customer is developed, you can positioning the product image to them. It is the biggest asset for the business. So you have to try to go for the long-term objectives, not short-term objectives. Just try to remember that, because on a lot of companies, those who are running for short-term profit, in long run they cannot survive. So that's why obviously you always follow slow and steady win the race. Such type of ideology you can follow. Maybe this is the sustainable, but sometimes you are run after for the short-term profit. Maybe product quality is poor, or the customer satisfaction day by day going to zero. You can't afford that. That's why you have to try to follow the long-term objectives, not short-term objectives. So that's all for today. Dear viewers, dear friends, if the video is enjoyable to you, please make a like and subscribe my channel. And again, my next video, it is very important chapter for CA, CMA or MBAs. That is the variance analysis or standard costing. You are requested to watch that. Once again, thanks for watching and have a nice time. Goodbye.